dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Andrew back on Liberty Nation Radio, continuing our conversation with me, your host, Mark Angelides, and Andrew Moran, Liberty Nation's economics editor. Andrew, thanks for sticking around. Now, we briefly touched on why Zoran Mamdani was quite popular amongst the young, very popular amongst the young in New York. And part of that was because they either can't see themselves owning a home, which, as you mentioned, it's now at the average age for owning a home now is 40 years old. And that brings us quite nicely into now. It was only recently that I learned this, but this brings into 10-year yields. And for those of you who aren't familiar with why this matters, Andrew, how do 10-year yields impact the mortgage markets?
Well, the 30-year mortgage, it tends to track the 10-year yield as the benchmark, typically because, companies rely on this because families tend to sell their homes around the 10-year mark. So the mortgage lenders, they base their 30-year yields on, 30-year mortgage rate on the 10-year yield. And now with the falling 10-year yield, you're also seeing falling mortgage rates across the board. And you haven't seen these mortgage rates in about probably a year. And a lot of the consensus is that they're going to keep falling because of the lower treasury yields across the board.
So they're at the treasury yields are they're under 4% now. Is that right?
The 10-year yield, it recently fell below 4%. It's now hovering around that area. And it's completely fascinating because, at the start of the year, it was at nearly 5% and then actually, tanked to as low as where it is today. But on the opposite end of the spectrum, long-term government global bond yields have actually risen. So the Japanese bonds, the British bonds in your country, those yields have been rising. So it's been the exact opposite. And I've been amazed by what's happening in this corner of the financial markets.
So what's driving this decrease in the bonds?
Okay, so various factors. One is that the markets have been penciling in the Federal Reserve lowering interest rates. The Federal Reserve pretty much. Jerome Powell said that a December rate cut is not guaranteed, but overall the expectation is that interest rates will be falling.
So just to interrupt, way to go, Jerome Powell, for creating stability by saying it might happen, it might not, it might not.
It's so funny because he keeps saying that, they go on a meeting by meeting basis. And then he starts off this press conference by saying, it's not a foregone conclusion that maybe your interest rate cut in December.
Sorry. So carry on with what you're saying.
Anyway, so the next part also is that people have concerns about the broader economy. So when people have concerns about the economy or the financial markets, which is heavily dominated by AI, people will seek shelter in a traditional safe haven asset like the 10-year yield. So those are their two main factors why yields have been falling. The other factor could be that people have more confidence in the fiscal situation in Washington right now, that there's going to be a more sustainable path. Treasury Secretary Scott Bessent, he had that 3 arrows growth plan, sure, and he wants to have the deficit GDP ratio at around 3% by the end of Trump's term. Now, in the last fiscal year, they did make some gains on that because it fell below 6%. So his argument is that when the economy is not in a recession, or there's not a pandemic, or there's no war, your deficit GDP ratio should be lower. So in the last fiscal year, it came to 5.9%, down from 6.5%. So you're gradually making gains, hopefully as the years go by.
So do we expect to see a boom in home buying now that the mortgage rates are at a pretty recent low?
Well, that is an interesting question because there was recent data from Redfin. It's a real estate platform, and it said that there's more sellers than buyers right now. There's about 500,000 more sellers than there are buyers. But what you're not seeing so much demand from first-time home buyers or people trying to purchase a new home. What you're seeing is refinancing demand. I did a story the other day, and it was data from the Mortgage Bankers Association, and that organization found there's actually a 100% increase in refinancing demand over the past year on a year-over-year basis because people were taking advantage of that lower interest rate on their mortgages. Because a year ago it was at 7%, and now it's at 6.2%. So you're potentially saving tens of thousands of dollars by refinancing. So that's the bigger thing right now. whether I think if it goes below 6% or 5%, then perhaps you could see a boom in real estate buying. But then that creates the other effect whereby you're having a greater supply of buyers, but then you're not having a greater increase in supply. So that could potentially bid up prices, and you're back to where you were in the first place. But but for the most part, lower interest rates, that's something that Trump, he promised he would do, and that's something he's slowly delivering on. So kudos to him on that front.
Yeah, it's a multifaceted issue, isn't it? So you've got basic interest rates, you've got mortgage rates. I wonder if part of that equation, and I'm guessing it's going to be quite a small percentage now, but with there's the deportation extravaganza and the self-deportations as well. Now, this will affect more the rental market. But if the rental market prices drop, people have more money to put away for a deposit.
Yes.
And so do we see if what's the right way to phrase this? If the deportations continue apace as they are now, will we expect that to impact the first-time buyers market down the line?
Yeah, I would tend to agree, yes, but that takes time. I mean, I had a conversation with
down the line. That's what down the line means, Andrew.
Yeah, because I've spoken to many conservatives, and they say, "Oh, well, you're starting to see the immigration data influence the housing market, but it's too early to determine that even the data itself. I mean, it shows a steady increase in median home prices, and you have that sharp decline in deportations." So you don't see a link yet, but perhaps in the future you will. I think one thing, I don't know if you're talking about this, but Trump had a proposal over the weekend by offering 50-year mortgages in a 30-year. I don't know if you've seen that, but that thing caused such a social media stir.
So I'm not entirely sure of the rationale behind that, and we don't have time to go into in this segment, but do look out on the pages of libertynation.com for Andrew's coverage on that topic, because it's going to be quite fascinating. But just to kind of wrap this up then, so actually one quick question on the 50-year mortgages. So will it create an incentive for people to stay locked in at a specific house because other people might be doing the same thing?
I think it would all depend on the mortgage rate itself, because in economics, there's something called the lock-in effect. So you saw this in the aftermath of the pandemic when people got 2% or 3% mortgage rates over a 30-year span. They didn't want to they didn't want to sell their home because they got such a lovely 3% mortgage. So if I were to sell my house and move and get a different mortgage, I'm going to pay a higher price, not only for the price tag of the home, but a higher mortgage cost. So over that 50-year span, it all depends on the mortgage rate, but you can also refinance. So there's a lot of advantages and disadvantages over that 50-year mortgage. The primary disadvantage, of course, they're paying more interest to the bank over half a century. Your whole life, you're paying the bank for this property.
It's like a contract for immortality. We earn your soul in this life and the next. We're going to be back with Andrew after this short break, talking Joe Rogan's folly. Don't go anywhere.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.